Welcome to Value Vest Daily, where we analyze best value and momentum investment opportunities. All right, let's get right into it, because today we have a real head-scratcher on our hands. We're talking about Circle, the powerhouse behind the USDC stablecoin. They just dropped an absolutely killer earnings report, and the stock tanked. It got crushed. So what on earth is going on here? Let's dig in and figure this out together.
So here we are, staring at what I can only call a classic market paradox. On one hand, you've got record growth. The numbers are just beautiful. On the other hand, a market that's bleeding red. It's like the numbers are telling one story, and the stop chart is screaming a completely different and, frankly, a much scarier one. Let's unpack the data that's got everyone so confused.
Okay, first up, the good news. And man, is it good. We're talking a 66% explosion in revenue year over year. That's right. In their latest Q3 report, they pulled in $740 million. They didn't just beat Wall Street's expectations, they absolutely obliterated them.
And now, for the crazy part, the paradox. After that incredible news, what happens? The stock doesn't just dip a little. Nope, it gapped down a whopping 11% in pre-market. Just a sea of red for a company that should be celebrating. On the surface, this makes absolutely zero sense. So that's the big question, right? A company beats on every single metric, it's firing on all cylinders, so why in the world did the market just slam the sell button? What did they see that we're missing? That's exactly what we're going to unpack right now. Okay, to really get why the market freaked out, we first have to understand what Circle actually is. Because, they're not just some random crypto company. They've built this incredible digital dollar moat. So what is this company anyway? Let's take a look. So their whole world revolves around this thing called a stablecoin. Theirs is USDC. And it's super simple, really. Think of it as a digital dollar. For every single USDC that's out there, Circle has one US dollar or something just as safe like a treasury bill locked away in a reserve. That's what keeps the price pegged, stable, right at $1.
And this right here, this is their secret weapon. It all comes down to trust. See, their main competitor, Tether, or USDT, has had all sorts of questions and scrutiny about what's actually backing their coin. Circle, they went the complete opposite way. They're all about transparency and playing by the rules. We're talking monthly audits by Deloitte. That's huge. And that's exactly why the big players, the institutions, trust them. They need to know their money is actually there.
Here's a good way to think about it. If the crypto space is like the Wild West, then USDC is trying to be the most buttoned-up, FDIC-insured bank in town. It's that reputation for being safe and regulated that gets them deals with giants like Visa and MasterCard. That's their moat, and it's a powerful one. All right, so we've established they're built on a foundation of trust. Now let's get back to those growth numbers. The numbers that make that 11% crash just seem so weird, because this earnings report, I'm telling you, it was an absolute home run. Just look at this. The growth is just staggering. Revenue up 66%. Net income, get this, up 202%. The amount of their digital dollars in circulation more than doubled. That's not just growth, my friends. That is straight-up explosive expansion. And this chart really drives it home. Look at that jump from $445 million to $740 million in a single year. This is the kind of top-line growth that makes investors drool. It's what you dream about finding. And if you thought that was impressive, get a load of this. In the third quarter alone, their network processed $9.6 trillion. Trillion with a T. That's a 580% jump from last year. The sheer scale of what they're doing is it's immense. Okay, so let's recap. The business is solid. The growth is off the charts. So what gives? Let's finally solve this mystery. Why the massive sell-off? Well, it turns out the market wasn't really looking at these amazing numbers. It was looking forward, and it got spooked by two specific fears. And here they are, the two big worries. Fear number one, rate cuts. See, a massive 96% of Circle's revenue comes from the interest they make on all those cash reserves. So if the Fed starts cutting rates, well, that could seriously squeeze their profits. Fear number two, dilution. They announced a huge chunk of stock-based compensation. We're talking $435 million. That makes investors nervous because it means more shares out there, which could make their existing shares less valuable. It waters down the pool. Yeah, and this quote I saw floating around on X, formerly Twitter, just nails the feeling out there. Good earnings, bad reaction. Classic stablecoin trap. It's so true.
The company did everything right, but its business model is just uniquely exposed to these macro fears, and it created this trap for the stock.
But you know what? This is where things get really interesting. Because when a stock sells off based on fear of the future, not because the business is actually doing badly right now, well, that can spell one thing: opportunity. So let's flip the script and look at the bull case.
First off, let's look at the technicals. That sell-off has hammered the stock's RSI, that's the relative strength index, all the way down to 28. Now for you chart watchers out there, you know anything under 30 is considered deep in oversold territory. That's often a flashing light for traders that a rebound might be just around the corner.
And it's not just the chart either. Take a look at who owns this stock. The so-called smart money, the big institutions, they own a huge piece of this pie, over 38%. And what's more, big names like SG Americas and UBS have actually been adding to their positions recently. That tells you they see long-term value here.
And Wall Street seems to agree. The average short-term price target from analysts, it's sitting at $170 a share. Now with the stock getting beaten down into the low 90s, well, you can do the math. That's a massive potential upside.
But let's zoom out even further. Think long-term, like 5 years out. The really bullish analysts are calling for a price target of, wait for it, $420 a share. Now that's based on the idea that stablecoins are just going to get bigger and bigger, and USDC is going to own a huge slice of that pie.
Put it all together and you're looking at a projected market cap of around $80 billion by 2030. From where it is now, that's a potential four-bagger, a 4x return. So the key takeaway here is that the long-term story, the big picture, seems totally intact even with all this short-term noise.
Now look, let's be real for a second. This isn't a guaranteed slam dunk. You've got competition. Tether's still the big dog on the block by market share. And those risks we talked about, they're very real. Fed rate cuts, more stock dilution, or even just another brutal crypto winter, you absolutely have to keep those things in mind.
And of course, the obligatory disclaimer, this is not financial advice, folks. We're here for informational and educational purposes only. You have got to do your own homework, your own research, before you even think about putting your money into anything.
So that leaves us with the big question, doesn't it? Was this 11% crash a huge red flag, a warning sign of trouble ahead? Or was it a golden buying opportunity created by the market's short-term panic? The future really hinges on whether that incredible expansion can just power right through the challenges. Please subscribe, like, and share ValueVest Daily for learning totally unbiased daily opportunities before you put your money to work. Hey, one more thing. Please put in the comments if you want us to deep dive any specific ticker symbol.